Welcome to Markets Now. I'm Michelle Rook along with Brian Grady, editor of Pro Farmer, and mixed in the livestock futures today on the close. Cattle higher, hogs mostly lower, and over in the grains, well, mostly lower in the row crop sector, mixed in the wheat. Brian, let's start off with the wheat market. It was the price leader last week with the higher weekly close, the key reversal up. Have we put a bottom in that market, and do you continue to anticipate we'll be able to extend some of these gains here or not in HRW?
So short term, I do think we put in a bottom. The fund washout was just too extreme, and that's why we're seeing the HRW and the spring wheat markets continue to rebound in here. The SRW market is reflective of the fact that the export demand pace is just so poor. So we'll have to see. I would be shocked if wheat has leadership to the upside on a sustained basis.
Week was basically a lot of it was technical in nature. But are we putting a little war premium into the market, or is the market also anticipating some lower crop yields and production when we get to the WASD on Friday?
Yeah, so the WASD report or the winter wheat crop estimates from NASS will be out, the first ones, and we're going to see a tale of two different crops. SRW is very good, and that production number will be reflective of that. The HRW crop is poor, and so we got some question marks in terms of not only harvested acres but yield and final production there, and so we'll have to see how that all shakes out. Some of those acres aren't going to be harvested. They may be planted to other crops. And so that all will come into play on Friday and be a much clearer picture of that situation.
Right. So consolidation in the corn today, although the forward spreads are working, what is kind of driving that market right now, do you think?
Well, to be honest with you, not a whole lot. You mentioned the bull spreading there with the July contract higher and then the new crop under pressure. I think we're probably going to see something similar to that as we move forward. Just kind of choppy trade as the market looks for some direction. From a weather perspective, we have some concerns about corn acres up in the northern states with North Dakota, Minnesota, Wisconsin, Michigan, that running well behind what their normal pace would be for planting. So there are some concerns there, but the rest of the Corn Belt is basically running ahead of normal pace for the planting. And so all in all, it's off to a good start. We'll have to see it as the growing season unfolds, how that all comes into play. But I think from a weather perspective right now, the market sees it as neutral to maybe favorable. And demand is a concern because of some of the Chinese cancellations here recently. We're going to probably see the ending stocks number for old crop go up. And I think when we look at the new crop ending stocks for corn, the question is whether or not it'll be above 2 billion bushels on Friday when USDA releases its initial 2023-24 balance sheets.
Yeah, what's your best sense about that? Because I know a lot of the average guesses are getting close to that.
Yeah, the average is pretty close to that, a little bit above, but it's a pretty wide range. So there will be some surprises, I think, on the new crop corn carryover. And the one certainty is that I highly doubt that USDA is going to change its yield here in May. Just not likely to happen at all. So anybody that's anticipating anything other than a trend line yield from USDA to start off with is probably going to be disappointed.
Little consolidation in the soybeans as well here today. But again, we had a higher weekly close last week and we managed to hold the March lows. So, can that market build on that? Because the ending stock situation there is certainly much tighter than what we see in corn.
Yeah, so the ending stock. So when you look at the big picture, much tighter. Stocks to use ratio is tight. The problem we have in soybeans is that export demand is slowing seasonally. Brazil has a record crop that it's now moving on to the world market. Brazilian prices are cheaper than U.S. prices, and so you're probably going to see some more potential imports coming into the southeast U.S. And so there are some headwinds for the soybean market. But with that said, like I mentioned, the ending stocks and stocks to use ratios are supportive. So I can't see a big move to the upside unless something changes dramatically. And I don't see a whole lot of heavy price pressure either.
Yeah. We did run up into a little chart resistance today as well, though it looked like, didn't we?
Yeah, and I think you'll see that kind of ping-ponging price action develop as we move between resistance and support levels. We just don't have a dominant factor right now. So we kind of got the known factor of the fundamentals, and then the technicals will kind of guide the short term price action.
Yeah, no doubt. And you mentioned exports or demand being a concern, and export inspections weren't all that great today, were they? Or at least below expectations.
Yeah, so soybean exports are slowing seasonally, like I mentioned. Corn is poor, and wheat is poor as well. And so, when you look across the entire sector there, the exports aren't providing us any support.
Let's talk about macroeconomics too, because money flow has been an issue, especially last week with the Fed announcement, the bank failures continuing and whatnot. But now, today, we have crude oil moving higher, but you couldn't seem to get corn to follow or soybean oil. So, what's going on in that whole market?
Yeah, so the money flow all comes into play with the technicals that I mentioned, and I think that you'll continue to see that. And unless the funds just decide that they really want to get aggressive on one side or the other, we probably are going to see price action kind of volley back and forth with day-to-day price action being dictated by money flow as much as any of the fundamentals that I've mentioned.
You bet. So let's talk about the cattle market. A down week last week, but a little bit of recovery here today. Is that market just feeling like the futures are too far away from the cash here, or is the market anticipating higher cash, or what?
Well, I really think that the futures are too pessimistic, well below where the cash index traded or the cash market traded last week. And we've been down for 3 straight weeks, total of about $6.50 down over that period. But the futures are just way underneath the cash. And so I don't see a whole lot of downside risk. Now, with that said, the technicals, there's a bear flag on the daily June chart, and if we take out last week's lows, those technicals are probably going to supersede anything that I just said about the relationship with the cash market, and we'll see more heavier price pressure. But we'll have to see. But from a cash perspective, 3 straight weeks down, probably going to be fourth week this week. We'll just have to see how it all develops. And we put in a seasonal top, I think, no doubt, in the futures, the cash market, and in wholesale beef.
No doubt. What about the hog market? A tough down week last week. Just seems like we continue to see, problems here with the futures too far ahead of the cash trade. Is that the problem, or is it that we just have too many numbers, especially with talk of sow liquidation now, or what?
Yeah, so I think from a numbers perspective, they've just come in heavier than what USDA's Hogs and Pigs report indicated, and that's a fundamental price pressure there. When we look at the charts, we just futures can't get out of their way at the moment. Path of least resistance is down, and we just see consistent selling. If we try to tick the market up a little bit on corrective buying, we see fresh selling come in and just continues to slide. So they've really narrowed up those premiums that the futures hold to the cash index. The cash index is rising seasonally. It took it a while to get going, but it's finally starting to firm up. The question now is whether the cash will go up and meet the futures, or whether the futures are going to continue to erode those premiums. And based on what we've seen over the past several weeks here, the trader is going to be pretty aggressive in narrowing up those premiums.
Yeah, it just seems like the cash can't catch up fast enough. All right. Thanks so much for joining us, Brian Grady with Pro Farmer, and that is Markets Now.